In this conversation, we look inside how family offices think, what separates those who create wealth from those who preserve it for generations.
I'm with Whittier Trust. Whittier Trust began in 1935 as the single family office for the Whittier family. The Whittiers were one of the developers of Beverly Hills and the Beverly Hills Hotel. We continue to manage wealth and serve as the family office for the Whittier family, the sixth generation of the Whittiers. We also serve as a outsourced family office for other families. Total assets under management, about $26 billion. And the types of investing we do, we invest across asset classes, as you can imagine, invest in traditional stocks and bonds, the simple stuff. Also, given the history of the Whittier family, feel very comfortable making direct real estate investments. We do invest some portion of our capital with outside managers, so private equity, private debt, venture capital. But again, for the most part, the bulk of our assets, and that's something that's been a surprise to me in looking at families who've preserved and grown their wealth over multiple generations, is how simple it can be. Not to say that you shouldn't allocate some of your assets into some interesting and fun opportunities, but so many of the families who've preserved and grown their wealth over generations have just done it through stocks, bonds, real estate. In terms of something that's unique that we're looking for right now on the real estate side, as many of you know, dollars, the prices are a little bit challenging. So we haven't executed on deals much of late. We used to do 3-4 deals per year. We only did one deal last year. We've only done one deal so far this year. But what we are looking at, historically, we did a fair amount of value-add multifamily investing. We haven't done that in the last couple of years, but we have seen a couple of interesting industrial opportunities. And sadly, I have to say they've all been outside of California. Hopefully, the environment in California will become a little bit more business friendly. But at the moment, we're looking outside of California. Trying to think of other interesting things that have come across my radar. AQR, which is a hedge fund that's been in existence for a long time, has had a strong track record led by Dr. Cliff Asness. They have a product at the moment called the Flex SMA, so SMA, separately managed account. That's a terrific, innovative tax product that will help wealthy families, wealthy individuals who have benefited from a significant capital gain to help offset those capital losses, something that might make sense to dive into if you're in that position or if you're advising other families in a similar position. Trying to think of some other fun investments that we've been fortunate to make. We've got a long-term relationship with DFGA's Growth Fund. DFGA is very much in the ecosystem with Founders Fund, so we've been fortunate to make some early investments in companies like Anduril, Palantir, Coinbase, SpaceX. I feel like everybody's in SpaceX. But the Anduril defense ecosystem is something that is certainly exciting right now and something that's been different in my lifetime. When I started in this business, defense was not on people's radar as an innovative fund sector to invest in. As we're wrapping up, thinking about the $1 million piece of advice, another thing that I've found very fascinating in my seat and looking through both people who've generated wealth in their first generation and then also looking at families that have been able to maintain their wealth over many generations, is that the skills needed to create wealth are very different and often opposed to the skills that are needed to preserve wealth over time. I'm going to pause. I'm going to say it again because it's something, again, that really struck me. Again, the skills that needed to create wealth are often very different and often opposed to the skills needed to preserve and grow wealth over time. So with that, if I were in a situation, I wish I were, that I had come to this platform as somebody who's been a wealth creator, built a company that was worth $300 or $400 million. I get the often the hubris that comes with that. But I would encourage anybody who's in that seat or anybody who's advising folks in that seat to take a step back, realize that, hey, The person who's created that wealth might be the smartest person in the room, but there are others that are around who have seen patterns, have seen hundreds of reps of other families and how to preserve and grow their wealth over time. So encourage those folks to come to the table with a little bit of humility. They can learn from others.
That's great advice and right on time. Give a little round of applause for Jeff here. Nice honesty. I love the candor.
Thanks for staying with us through the series. Up next, you'll hear how private investors are positioning for 2025 with cash flow and certainty.
If you are a founder, raising capital, developing real estate, or you're an investor, would love for you to get involved in the Family Office Club. I've run this community for 18 years now. We've hosted 300 live events. We have 17 million social media group members and followers. We have the #1 YouTube channel on family offices. We have the #1 most popular podcast on family offices. You can learn more about us and our membership options at familyoffices.com. We have 30 in-person events planned in 2026 and another dozen events this year. Please go to familyoffices.com to learn more.